Improving support to British exporters was a major theme at GTR's UK Trade and Export Finance Conference. Margaret Ayres of UK Export Finance took this chance to talk about the newly introduced direct lending scheme.
We can offer interest rates that are seen as attractive at the moment. They're the commercial interest reference rates, which are determined by the OECD on a monthly basis. And normally we're finding, particularly say buyers in Africa, in Asia, in the Middle East, are very attracted by this scheme. So in terms of amount, I think the scheme, we are going to have a lot of documentation. There's got to be a lot of procedures. So probably under £10 million or $10 million. It's ideal, I'd say. Less than that, I wouldn't reject it, but we're going to have to find a bank that wants to work at that level in that country with that buyer, and sometimes it'll be able to be achieved. Other times we might find a different solution that the banking market can do, and that is perhaps simpler and quicker and keeps your buyer happy too.
This offer is becoming increasingly attractive to banks as well as exporters.
I think some banks see the direct lending scheme as a competitor to what they themselves do. But I think as Basel III kicks in and banks have to manage their balance sheets even more carefully and achieve certain returns, which is not possible to do if they're lending with high or low risk, low yield environment, which is what an ECA is, then I think actually using a direct lending scheme will become increasingly prevalent amongst most banks. It may take some years to get there, but over time, banks will, if not for 100% of the project, then certainly for 50% of the project or even a bit more, increasingly value the approach of the UK Export Finance in that respect. I think banks are at different periods in the evolution towards adopting Basel III rules. So some banks don't seem to mind too much about putting balance sheet out the door in support of these projects. Others do. And I think over time, and certainly by 2019, when Basel III really fully kicks in, then I believe that most banks will be following the approach where they'll try and find other investors, of which the direct lending scheme is one, to actually fund these assets.
Amongst key recommendations, the issue of UKEF's visibility was also discussed.
I think we are trying to get, we're attending national conferences and also international conferences, because it's important in our role to be known to the borrowers as well. And the more that they feel comfortable talking to us, that helps indirectly British exporters. The Carillion deal has been actually a big poster child deal for us, and we've had a lot of inquiries not only from, say, the competitors of Carillion, but also from other borrowers in the Middle East who saw that, the publicity that it got, and we've had quite there's much more awareness that we can now offer the CR8 from the UK.
UKEF support for us has been more in terms of levelling out the playing field, because we've been in the MENA region for many years essentially, but market conditions have changed over the past 3-4 years, as I touched on earlier. It's a lot more competitive. You've got lots of other exporters with their local ECAs in the market now, and also as volumes have reduced in the market, we've seen more people looking to buy from local companies, unless they've got a good reason to buy from an overseas company, and that's where UKEF comes in and provides that good reason for them.